Buy foreign stocks. Chapter 1. Buying foreign stocks. Cross-border trading. Technically, if you want to invest in foreign stocks, you have to do it with a brokerage that originates in your country, but there's a way around this. If you're an American who wants to trade directly through a Canadian broker or a Canadian who wants to set up an account with an American brokerage, either get a friend who lives in that country and use his address, or find a mail forwarding or mail drop service who will act as your address for $20 or so per month. If you live near the border, just drive across and rent a post office box. Once you got the address, call up the toll-free number of a brokerage and either fill out an online application or send it in with your credit card, debit card, PayPal, or check. In order to avoid the withholding tax, state that you're either an American temporarily living in Canada or a Canadian living in the US, whereupon they give you a special form to fill out to exempt you from taxes. If anybody asks, just say you're a student or a writer on doing research there. This is technically illegal. Globalization. Globalization from an investment point of view means that the countries of the world are all interrelated, such that there's a ripple effect when anything happens. If there's prosperity or depression in one or a few countries, like dominoes, others will follow their lead. Even though there's a big disparity in the wealth of the world, the nation's economies are all related by trade. For more info, refer to the book Commanding Heights, The Battle for the World Economy by Daniel Yergin, or the PBS TV series of the same name, pbs.org. Globalization and investing. With technological advances, the countries of the world have become increasingly interconnected. This is the concept of globalization, wherein the world is seen as one big place to invest, and this is exactly what some investors are doing, and it will increase as time goes on. With the interlinking of markets around the world, investors are no longer limited to the markets in their home country, they can invest anywhere they want. With globalization, anyone can access information from anywhere in the world whenever they want. There is a downside to the interconnectedness, that of the ripple effect. If any one stock exchange around the world starts to drop drastically, the others seem to follow suit. All economies are related to each other. The upside is the growing access that investors have to trade stocks of foreign and international companies. Many large corporations are traded on several exchanges in several countries all at the same time. The Internet has made it easy to trade stocks from all over the world regardless of what country they're headquartered in. The London Stock Exchange has the Stock Exchange Automated Quotations System, SEQ, which is screen-based trading similar to Nasdaq. They also have AIM/Alternative Investment Market, which is like the OTC bulletin board in the United States, where smaller companies are traded. Russia and the Eastern/Central European countries started stock exchanges in the 1990s. Russia's system, like Nasdaq, is called the RTS, the Russian trading system. Some of the major Eastern European stock exchanges are in Poland, Slovakia, Hungary, and the Czech Republic. The Frankfurt Stock Exchange in Germany has helped with the westernization of the former East Germany. There is currently an interconnected system among European stock exchanges where some particular stocks are traded at all of them. The Tokyo Stock Exchange is the dominant stock exchange of Asia, but there are others such as Korea, Malaysia, India, Thailand, Taiwan, Singapore, Philippines, Indonesia, Hong Kong, and even China has a stock exchange. Latin America has markets in Argentina, Brazil, Chile, Colombia, Mexico, Peru, and Venezuela. Some Latin American countries such as Mexico are modernizing, which means that the infrastructure companies like telephone, utility, construction, etc. are poised to make incredible gains, but because of the political and economic instability, the markets are volatile. Probably the most popular way of global investing is through mutual funds that invest in foreign stocks, which most of the big mutual fund companies have called overseas, global or foreign funds, or called by the part of the world they buy stocks from, like Latin American, Asian, etc. In the United States, foreign stocks are called American Depository Receipts, ADRs. They are commonly traded on American stock exchanges. When investing in foreign stocks, either through mutual funds or stocks An investor should be aware of which currency the stock is being invested in, either a foreign currency or currency in your home country. Changes in the value of a particular currency will affect the value of the investment. Invest in a foreign stock that is traded in your home country's currency, or invest in a foreign stock in another currency in a country that has a strong currency not subject to being devalued by a lot anytime soon. The Latin American countries have had the worst currency devaluations in the past several years. Today, through electronic communication networks, ECNs, such as Instanet, one of the largest ECNs worldwide, investors can conceivably trade stocks on a worldwide level after stock exchange hours, anytime they want. Currently, there is a proposal to unite 7 stock exchanges around the world electronically into a single worldwide global equity market where anybody can trade any stock they want. The 7 exchanges are the New York Stock Exchange and the exchanges in Australia, Tokyo, Toronto, Mexico, and Brazil. Euronext is an amalgamation of the major European markets. There is a major global index called the Standard & Poor's, S&P, Global 100 Index made up of 100 companies from around the world. Another global index is Merrill Lynch's Major 11 International Market Index Target Term Securities, R, also known as MITS, R. It is traded on the American Stock Exchange under the symbol EUM. This index is based on 11 sub-indexes of various countries as follows. Amsterdam Exchanges Index of the Netherlands. All Ordinaires Index of Australia. Company des Agents de Change 40 Index of France. Deutscher Aktien Index of Germany. Financial Times SE 100 Index of the United Kingdom. Hong Kong 30 Index of Hong Kong. IBEX 35 Index of Spain. Milano Italia Borsa 30 Index of Italy. Nikkei 225 Index of Japan. Stockholm Options Market Index of Sweden. Swiss Market Index of Switzerland. Because people want the freedom to invest in whatever company they want worldwide, and companies want to raise money by selling stock to whoever wants it, there will come a day when this will be a reality, once the government bureaucrats are pacified with promises of greater tax revenues of capital gains. World Stock Websites. escapeartist.com/global/investments.htm. offshoreinvestmentguide.com. interactivebrokers.de. ChineseMoneyMarket.com. world-investments.com. stockindiainfoline.com, India. emgmkts.com, World Markets. globalfndata.com. tradershaven.com, links to sites worldwide. Brazil Stocks/Brazil ADRs. Brazil is a country rich in natural resources. They say the 3 best countries in the world to bet on are Brazil, Canada, and India. The Brazilian stock exchange is Bovespa. There are Brazilian stocks on U.S. stock exchanges. buyupside.com/articles_stocks/brazil.htm. ehow.com, how to invest in Brazil's stock. firms.com/abacus-stocks-brazil.html. latin-focus/countries/brazil/brostock.htm. site-by-site.com/latin/brazil/stock.htm. wealthdaily.com/articles/brazil-stocks-investments. winninginvesting.com/brazil.htm.